Not all Wall Street analysts are made the same. And as you know, many just do not understand the Tesla stock story. Well, what if I told you that the top Wall Street analyst, and I mean the top analyst, who's not only a 5-star analyst, but the one that is rated in the top 1% of all stock professionals, is now projecting that Tesla will speed to $310 very soon. Today, let's see his reasons for why he thinks Tesla's a buy and the risk he sees that you need to consider. We've got Brian White joining us, and he has his own YouTube channel called MyTeslaWeekend. Welcome, Brian.
Hey, Herbert, it's great to be here. And this is a topic that gets overlooked a bit. We cover a lot of the really negative people. It's great to actually cover someone who knows what they're doing and has a track record to back it up.
Yeah. Yes, we know the other bear who's actually at the very bottom of the analyst, and he's very vocal and he's always on CNBC and other news. This guy needs to be out there more often, but it's great to see a top analyst actually talking about it. Let's see what he thinks. So this is the article written by Mizuho. And then it was Tesla unquestionably maintains its position as the front runner in the electric vehicle industry. It's currently grappling with the multiple challenges. Of course, 2023 weakening demand led to a series of price reductions, effectively increasing sales volumes, but adversely affecting profit margins. We know that. And then, of course, the Chinese EV maker BYD, the company has countered a genuine contender. And in China, as we've been reporting, even in China, their own home base, Tesla Model Y is still the number one sales vehicle there. That said, despite these and other issues, this guy, Mizuho's Vijay Rakesh, he's a 5-star analyst rated in the top 1% of the street stock pros, thinks Tesla is set to keep its EV crown for a while. What do you think about that, Brian?
So the BYD is actually number one in China if you add up all the models, because they offer a variety of models. If you look at the top 20 cars sold, there's something like 6 or 7 of them, where Tesla is 2. So there are, but outside of China, they've really struggled. In Europe, you can already buy a BYD, but they're not selling as aggressively as you would expect. The savings isn't as substantial as people thought. It's a very good car. It's not quite on Tesla's level, but they make up for it with a bunch of bells and whistles and design flares that may speak to individual buyers. It's a good car. But so much of the cost of the car is the materials, and so much of the car is built by robots that the labor savings isn't all that significant. The big savings they get is from efficiencies in manufacturing, and BYD is notoriously inefficient. They've got an astronomical headcount. They've got 4 times the headcount that Tesla has. Mind you, BYD has other businesses. They're one of the world's largest battery makers. They sell to just about everyone, apparently even including Tesla. So they're a bigger company doing bigger things, but at a much lower margin. At some point, their efficiencies will improve, their margins will improve, and they are, even before that, they're selling at a positive margin, making them a serious contender. If you can make $1 on every item you sell and you sell 1 billion items, there you go. I mean, that's Walmart for you. They don't make a huge margin on anything, but they move so much volume that it doesn't matter. And as long as BYD has the self-funding, which they do, they don't need to go out and raise money. They can continue building factories. They can continue improving efficiencies. And they are not just a serious contender. They are the contender.
Fantastic. Thank you for that rundown. So let's take a look at what Rakesh says, specifically his actual statements. So he says, okay, he goes, while there are multiple concerns with competitor ramps, particularly in China with BYD, and then there was the China and the US price cuts and potential EV slowdown in the US. Okay, we've debated that a few times. We continue to see the electric vehicle powertrain of the future. It's going to be the powertrain of the future, and believe that over the long term, Tesla's significant head start in EV manufacturing, vertically integrated manufacturing process, and technology leadership could help keep Tesla at the forefront of EV ramps as electrification is adopted globally. So he gets it. I don't know why anybody else would not get it. Electrification is happening. The electric vehicle has taken over. It's killing the ICE cars. That's who the competitors are. Tesla's the leader, and there is no slowdown because the growth of demand for EVs skyrocketed. The slowdown is just being affected by the legacy autos. It's still.
Yeah, I would agree with that 100%. The slowdown in the US is not, the consumer appetite has not shifted. It's still improving. The US electric auto sales are higher than ever before, but it's mostly on the strength of one company out of California, now Texas, that is driving most of it. And as the other manufacturers, the Europeans and the Chinese, start building factories in North America, Hyundai is building a plant in Georgia right now to build EVs. They've got a minivan they hope to have out next year by 25. That will be a new entrant in a new segment where there's no competition yet. That's a smart move, I think. And then you're going to have BYD and Li Auto and Xiaopeng and maybe Neo building factories in Mexico that will, all of those cars can benefit from the IRA credits, especially if they're also building the battery factories in North America, which at least in the case of BYD they would. So the US slowdown is more, as you said, a result of the poor planning by the big three auto than anything else. It's yeah, not so much real as we've discussed.
There was a survey that I reported on just yesterday, a couple days ago, and the survey, the announcers presented this as saying 51% of people do not want to, are not considering to buy an electric vehicle, and that's what they pointed out to this slowdown. Well, Jeff
So you're
Watts
saying
basically
only
said, well,
4.9 million? Yeah. Yeah,
49% of
4.9
people
million. Yeah.
want to buy an electric vehicle. And currently today, 10% of cars sold is an electric vehicle. And so you're telling me there's no demand? The demand is much higher than the actual sales, and it's going to go through the roof next year and onwards. So it's just funny how they
Yeah.
chose to present it a certain way when no, that's a really good number. So this is what Rakesh continues to say. He counts Tesla's improving battery tech. Yep. Strong ADAS, that's the safety features of full self-driving, that roadmap, the potential of the Cybertruck, even though it concedes it's more muted near term, the possibility of a low-cost Model 2 coming into market 2025, 2026, as other reasons why the company will keep its status as a leader in the global EV market. It also helps that aside from BYD in China, most competitors simply don't have the scale and volume required to produce profitable electric vehicles. Rakesh reckons Tesla will reach deliveries of 2.3 million. So that's a fantastic number coming from an institutional analyst. I think most are saying 2.2. The bullish retail investors like us are saying 2.4. So for Rakesh to believe 2.3, that's great, amounting to 25% year-over-year increase. Good operating margins, currently stands at 10%, even in the face of recent price cuts. Thoughts on that?
So the the only problem I have with this assessment is it's so focused on automotive, and automotive is only one part of the value story of what Tesla does. We've
Exactly.
got the energy sector, we've got autonomy, we've got bots, we've got all these other things. But energy is already producing money in volumes substantial enough that Wall Street is finally paying attention across the board. If you're not paying attention as a Wall Street analyst, you need to be removed from this coverage beat. But there, if you were looking at it strictly as an automotive company, I would give it a trading multiple over companies that are clearly moving in the wrong direction. If your roadmap is going in what is clearly a dead end, I don't think you deserve any kind of earnings multiple, because there will be no earnings very soon. But even with that said, Tesla's valued as much as the rest of the auto market combined, which is outsized. I do not see a future in which Tesla has a 50% global market share. That number is too high. But they could, when you factor in all the other lines, all the other business sectors that they're already in and moving into aggressively, it starts to make sense again. And yeah, there's only so much you can load this spring before it finally pops again. And that's where we're at over the last couple of years.
Yeah, very good point. Again, Brian, thank you for sharing that. He did not talk about energy, bots, or AI, and he's just strictly talking cars and auto. And so he gets the auto business, which is great, but he hasn't yet got the full story. The 310 price target should be higher then. But here's what he says: there's risk involved, right? The significant slowdown in EV demand, forcing Tesla to further price cuts, impacting revenue and margin. Still, this is not enough to dampen Rakesh's outlook, with the analyst giving Tesla a buy rating and a 310 price target. That's going to 32% gain from where it is today. Tesla always elicits a wide variety of takes among the street analysts. So if you take a look at what the analysts are saying right now, there's it's a hold rating right now because you got 12 buys, 13 holds, and 5 sells. At 249, the average target suggests the shares have room for only modest growth of 6% in the year ahead. That's where we're at today.
6%, huh? That is that is lower than my estimate. I don't generally do price targets, but 6%, that's $15 a share. That would just get us back to where we were last week. I think that's crazy talk, but okay. The difference of opinion is pretty interesting when you look at more traditional companies. If you look at Coca-Cola and look at everybody's estimates, everybody's forward-looking statements and predictions, they generally all look the same because you know what kind of company Coca-Cola is, you know what kind of market they're in, you know what kind of obstacles they face. So but with Tesla, you do get a variety of opinions, and you have a lot of people who say, "I believe in it as a this or a that, cars or energy, but I don't believe on it on all the other things." And that makes it very difficult to reach a consensus in terms of the value. But for my money, and you know my philosophy is, I do look at a lot of companies and I see very few with the same kind of upside potential and the ability to execute on little things and big things. But the little things really stand out. A lot of the little things that they manage to get done that bigger companies somehow just can't do, like little improvements throughout the year. Most manufacturers get one or two. Tesla gets one or two sometimes every week, and that's pretty unusual, and it allows for extra pennies along the way, and every penny adds up. And if you're making millions of cars, which they now are, a dollar a car becomes real money, and especially 50 or $100 a car becomes a vast fortune.
All right. Well, this is Vijay Rakesh from Mizuho. He's the top 5-star analyst, top 1% of all the streets stock analysts out there. So let's listen to him. He's got the track record. You know, he might not be right this time, but 310, I'll take that. That's a good number. Again, given that he's just thinking about just auto. Perfect number for
Right.
auto.
And given that is
only.
and given that he's just thinking about it for now, I would add to that there's been a lot of strategy shift that we've seen among the legacy auto. One fine example is that they're shifting their advertising strategy. They're not going to be the legacy car companies will not be running free Tesla ads at the Super Bowl this year like they have in the past,
Yeah.
because every EV ad is a Tesla ad, and they're reevaluating that strategy. But they're still at all the big auto shows and whatnot, spending vast sums of money advertising to the tune of billions a year. And earlier we talked about how well Tesla just announced the Model 3 refresh on a Tuesday night with no fanfare. What a missed opportunity. You can always pump the ads later, but if you overpump it too soon and now you've got a 6-month backlog, you're going to lose customers over that. Might as well get them out there and let everybody know what it is. And as it ramps, as supply and demand get back in balance, that's when you start pushing a little harder. That's when you shift from a commercial that just shows a pretty picture of the pretty car to a little ad. And I say ad, they're not paying to advertise, but they're making it. Switch to an ad that actually gives you the value proposition so it makes more sense to you, rather than just saying, hey, look, pretty car.
Yeah. I mean, the
So
legacy
they're
auto, they need to maintain the brand and this perception that the consumer has in it. They've done a good job right now. I'm not sure that the perception is changing, but Tesla still has the perception as the leader, and I think that that's going to continue. So wonderful.
yeah, yeah, and I would say that their strategy. How much do you want to advertise for cars that you know you're going to stop making
Yeah,
in 5 years,
yeah,
and how much do you want to advertise for a car that you're not making this year? So it's they're in a They've painted themselves into a corner, and they've also spent 20 years convincing their customers that EVs are not good. And then, of course, they built models that prove it. So, the Cadillac Celestiq is a $300,000 car with a hood long enough to camp on, and it still doesn't have a frunk. I mean, it might have a frunk large enough for half a sandwich, but I'm not sure how helpful that is unless it's, yesterday's tuna fish.
All right. Thank you so much, Brian. Follow him on his YouTube channel, My Tesla Weekend. Thank you, everybody. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.